The Central Bank of the Islamic Republic of Iran is the Central Bank of Iran. It is entirely government-owned. Among its major purposes are maintenance of the value of the national currency, balance of payments, as well as facilitating trade transactions and contributing to the economic advancement of the country. The central bank is in charge of laying and implementing monetary and credit policies of the country, the importation of goods, issuance of documentary credits, and registration of orders for documentary bills of exchange for imports are also done in accordance with the policies of the central bank. It is a member central bank of the Asian Clearing Union. History. During the Achaemenid era, trade boomed and subsequently banking operation expanded to an extent that Iranians managed to learn the banking method from the people of Babylon. The first attempt at introducing paper currency in Iran occurred during the Mongol Ilkhanate of the 13th century CE. The innovation, developed in Song dynasty China, did not take hold in Iran, and paper currency did not return to Iran in any significant manner for several centuries. Modern era. In modern banking, the British first opened the Imperial Bank of Persia in 1889, with offices in all major cities of Persia and India. It was established in 1885 with a concession from the government of Persia to Baron Julius de Ruyter, under a royal charter from Queen Victoria, to compete with the British Bank. Imperial Russia also opened the Russian Loan and Development Bank. The first state-owned Iranian bank, Bank Melli Iran, was established in 1927 by the government of Iran. The bank's primary objective was to facilitate government's financial transactions and to print and distribute the Iranian currency. For more than 33 years, Bank Melli Iran was acting as the central bank of Iran with the responsibility to maintain the value of Iranian rial. In August 1960, the Iranian government established the Central Bank of Iran and separated all central banking responsibilities from Bank Melli Iran and assigned it to the newly formed Central Bank. The Central Bank of Iran was renamed to the Central Bank of the Islamic Republic of Iran immediately after the Islamic Revolution in 1979 and the overthrow of the Shah of Iran. Scope and responsibilities of the Central Bank of the Islamic Republic of Iran have been defined in the monetary and banking law of Iran. Iran's banking system adhered to the new Islamic rules that prohibit earning or paying interest. CBI maintains a museum of historic and ancient jewelry owned and used by the ex-kings of Persia. This museum houses the imperial crown jewels and is one of the most appealing tourist attractions in Iran. Money and Credit Council. The Money and Credit Council is the highest banking policy-making body of Bank Markazi. Its permanent members include the CBI Governor, the Finance and Economy Minister, 2 ministers chosen by the Cabinet, the head of the Chamber of Commerce, the General Prosecutor, and 2 lawmakers. Each year, after approval of the government's annual budget, the CBI presents a detailed monetary and credit policy to the MCC for approval. Thereafter, major elements of these policies are incorporated in the 5-year Economic Development Plan. MCC meets every 3 months. The Iranian Central Bank needs more independence from the government in order to combat inflation, according to the country's Parliament Research Center. As of 2010, Iran's central bank is not able to conduct a proactive monetary policy and has no control over the government's fiscal policy. General Assembly. The current combination of the central bank's board of directors of the President, Economy and Commerce Ministers, Deputy President for Strategic Planning, and a minister selected by the Cabinet. Reform proposal. 7 economists with at least 15 years of work experience were to become members of the General Assembly according to a new law proposed by the Majlis in 2010, thus moving this body from being state-dominated to one where the private sector has greater say in the decision-making process. Tenure of each member would be for 10 years and only for one term. Then President Mahmoud Ahmadinejad critiqued this proposal and said that it is important for the Central Bank of Iran not to fall under private control, because it would not benefit the Iranian people over the long run. Governors of the Central Bank of Iran. The President of Iran proposes a person as the governor of CBI, who must be verified by the General Assembly and appointed as per a presidential decree. The governors of Central Bank of Iran are as follows. Objectives and functions. The objectives of the Central Bank of the Islamic Republic of Iran as per its charter and according to Section 10 of the Monetary and Banking Law of Iran are as follows. Maintaining the value of national currency. Maintaining the equilibrium in the balance of payments. Facilitating trade-related financial transactions. Improving the economic growth potential of the country. To achieve the objectives as stated in the MBAI, CBI is endowed with the responsibility of fulfilling the following functions: issuance of notes and coins, supervision of banks and credit institutions, formulation and regulation of foreign exchange policies and transactions, regulation on gold transactions, formulation and regulation on transactions and inflow-outflow of domestic currency. Islamic banking. After the Islamic Revolution, the central bank was mandated to establish an Islamic banking law. In 1983, the Islamic Banking Law of Iran was passed by Majlis. This law describes and authorizes an Iranian Shiite version of Islamic commercial laws. According to this law, Iranian banks can only engage in interest-free Islamic transactions. These are commercial transactions that involve exchange of goods and services in return for a share of the provisional profit, called mubadala. In practice, Iran uses what are officially termed provisional interest rates, as rates paid to depositors or received from borrowers should reflect the profits or losses of a business. Under these rules, deposit rates, known as dividends, are in theory related to a bank's profitability. In reality, however, these dividends have become fixed rates of return. Depositors have never lost the savings because of losses made by the banks and almost never received returns larger than the provisional ex-ante profit rates. Interest charged on loans is presented as fees or a share of corporate profits. All such transactions are performed through Islamic contracts, such as Mozaribi, for Ushas Rt, Joala, Salaf, and Ghazal Asna. Details of these contracts and related practices are outlined in the Iranian interest-free banking law and its guidelines. Ghazal Asna, an interest-free, non-profit a loan extended by a bank to a real illegal person for a definite period of time. Joala, the undertaking by one party to pay a specified money to another party in return for rendering a specified service in accordance with the terms of the contract. The party rendering the service shall be called Amal. Mosikar, a contract between the owner of an orchard or garden with another party for the purpose of gathering the harvest of the orchard or garden and dividing it, in a specified ratio, between the two parties. The harvest can be fruit, leaves, flowers, etc. of the plants in the orchard or garden. Mozara, a contract where the bank turns over a specified plot of land for a specified period of time to another party for the purpose of farming the land, and dividing the harvest between the two parties at a specified ratio. Mozaribi, a contract wherein the bank undertakes to provide the cash capital and other party undertakes to use the capital for commercial purposes and divide the profit at a specified ratio between the two parties. parties at the end of the term of the contract. Sharia-compliant assets has reached about $400 billion throughout the world, according to Standard & Poor's ratings services, and the potential market is $4 trillion. Iran, Saudi Arabia and Malaysia are at the top with the biggest Sharia-compliant assets. According to the IMF, Islamic banking forbids pure monetary speculation and stresses that deals should be based on real economic activity and therefore poses less risk than conventional banking to the stability of financial systems. Criticism: critics believe that the Iranian interest-free banking law has simply created the context for legitimizing usury or riba. In reality, all banks are charging the borrowers a fixed preset amount at a rate of interest that is approved by the central bank at least once a year. No goods or services are exchanged as part of these contracts, and banks rarely assume any commercial risk. High-value collateral items such as real estate, commercial paper, bank guarantees and machinery eliminate any risk of loss. In case of defaults or bankruptcies, the principal amount, the expected interest and the late fees are collected through possession and the sale of secured collaterals. Credit agency: Iran does not have any special credit rating institute for customers' credibility rating, but all Iranian banks obligated to send statistics of bounce check to Central Bank of Iran. However, follow-up on bounced checks are a difficult task. In 2010, Iran Credit Rating Consulting Company became Iran's first credit agency by decree of the CBI. Payment systems. In 2005, the government obliged the Central Bank of Iran and the Iranian banks, mostly state-owned, to set up all the necessary infrastructures for fully launching e-money in Iran by March 2005. While this plan has not yet fully materialized, local debit cards are now commonplace and have removed the main obstacle to the growth of e-commerce as well as the full rollout of e-government initiatives. Iran remains largely a cash-based economy. The central bank has developed the real-time gross settlement system as the main center for settlement of Iranian banks' transactions in rial. Upon implementation of the first and second phases of this system in 2006-07, real-time settlement through the Interbank Information Transfer Network and Interbank Clearinghouse was started in the review year. Since 2007-08, bank-to-bank and customer-to-customer payments were also settled through SATNA, a retail funds transfer system launched at end 2006-07 for real-time transfer of a large volume of payments of relatively small value, was further developed in 2007-08. Moreover, there are further plans to connect Iran's SHETAB to information transfer networks of other countries. In 2011, 2 new payment systems were launched. Scriptless Securities Settlement System is the electronic infrastructure for placement and settlement of various securities, including governmental and CBI participation papers. The launching of the automated clearinghouse system for processing individual and multiple payment orders. Connection of Iran's interbank information transfer network to other ATM and POS switch systems for the acceptance of international bank cards. Designing of the electronic card payment system for the centralization and reorganization of POS checks. As of January 21, 2010, account holders will no longer be allowed to withdraw more than $15,000 from Iranian banks, but they can still write checks for larger amounts. The government wants people to use bank checks and electronic banking systems instead of cash transactions. 10. 91.7% of checks written in 2009 bounced. Debit credit cards in 2007. Tetra Tech IT company announced that using Visa and MasterCard is now possible for online sales and in Iranian e-card terminals at shopping malls, hotels, restaurants, and travel agencies for Iranians and foreign tourists. Iran's electronic commerce will reach 10 trillion rials by March 2009. As of 2015, Iranian consumers have very little debt. Some wealthier people have debit cards, but there is no MasterCard, Visa or American Express in Iran, and few foreign banks are active there because of international sanctions. Around 94% of Iranians had a debit card, compared with less than 20% in Egypt. Hawala. Many Iranian businesses and individuals also rely on Hawala, an informal trust-based money transfer system that exists in the Middle East and other Muslim countries. Since the imposition of recent U.S. and UN financial sanctions on Iran, the use of Hawala by Iranians reportedly has increased. Anti-money laundering law. The Central Bank of Iran is enforcing the newly passed anti-money laundering law to curb possible crime. The Minister of Intelligence, the Governor of the Central Bank of Iran, and several other ministers are among the members of the special committee in charge of the campaign against money laundering. In 2008, the Paris-based Financial Action Task Force watchdog praised the Islamic Republic's crackdown on money laundering. The 34-member financial watchdog congratulated Tehran on its commitment to seal money laundering loopholes. However, in 2010, FATF named Ecuador and Iran on a list of states that it says are failing to comply with international regulations against money laundering and financing terrorism. It has been estimated by the government of Iran in 2015 that dirty money from drug trafficking in Iran amounts to 10 trillion tumans a year, some of which has been finding its way into elections and the securing of votes to influence the country's politics. Key statistics. As of 2010, major economic indicators will no longer be announced by the central bank but will instead be reported by the Statistical Center of Iran. GDP growth. The government of Iran projects GDP growth to average 8% between 2010 and 2015 in its 5-year economic development plan. According to Business Monitor International, in 2010, growth will average 3.6% between 2009-2010 and 2013-2014. This is substantially below an estimated 5.6% for previous 5 years. The International Monetary Fund forecasts Iran's economy will grow 1.6% in 2010 and 0% in 2011, from 1.1% in 2009 and 1% in 2008 and 7.8% in 2007. Through the successful implementation of the Iranian Economic Reform Plan, the IMF predicts Iran's economy to grow at a rate of 8% by 2014-2015. Projections by The Economist in 2010 place Iran's nominal GDP at $701.9 billion in 2013. The Economist's 2010 revised projections for GDP growth in Iran are 3.0%, 3.0%, 2.9%, 3.1%, 2.9%, 2.9%. Money supply and inflation. Money supply. The International Monetary Fund reports that in 2001, currency and demand deposits, an aggregate commonly known as M1, were equal to $71.7 billion. In that same year, M2, an aggregate equal to M1 plus savings deposits, small-time deposits, and money market mutual funds, was $153.6 billion. According to the CBI, the country's liquidity amounted to some $174 billion by April 2008, $197 billion by October 2009, and over $300 billion in 2011. Estimates put the amount of capital floating in Iran's market at $254 billion in 2012. Inflation. According to the Central Bank of Iran, inflation rate was 13.5% in 2009 and 25.6% in 2008. Lending rates. Commercial banks lending rate 12.0%, 11.5%, 12.0%. Free market rate is 24 to 25%. Exchange rates. Average official exchange rates. Rials per US dollar 25,780.2, 18,517.2, 12,175.5, 10,800, 10,308, 9,900, 9,143, 9,408, 9,227, 8,964, 8,885, 8,193. Note: Iran has been using a managed floating exchange rate regime since unifying multiple exchange rates in March 2002. Iran devalued its currency in July 2013. Pre-unification, rials per US dollar, market 8,200, 8,050, 8,350, official 6,906, 1,753, 1,764. Banking balance sheets. Debt. The government's and banks' debts to the central bank dropped from 905,926 billion rials in November 2008 to about 776,486 billion rials in November 2009. According to CBI reports, the value of its assets fell by 11.6% during the last 12 months to 1,137,455 rials in November 2009. Meanwhile, the total debt of 11 state-run banks alone to the Central Bank of Iran has exceeded $32 billion in 2009, showing a tenfold increase over the past 4 years. Bank Melli Iran, with nearly $9 billion, had the biggest debt, followed by Bank Sepah, Iran's oldest, with about $4.8 billion. Bank Maskan, Keshavatsi Bank, Bank of Industry and Mines, and the Export Development Bank of Iran were next, with the respective debts of $4.70, $4.10, $3.50 and $1.1 billion. Private sector banks had much lower debts. Bank Parson, the largest private-run bank, owed about $421 million to the central bank. In addition, the collective debt of state sector companies to the central bank has reached $25 billion. Overdue loans. According to unofficial figures, overdue loans have reached $175,000 billion, an increase of 75% over 3 years. Plan to inject about $13 billion to recapitalize the banking sector. 90 individuals have managed to secure collective facilities totaling $8 billion from Iranian banks, with previous $27 billion unpaid loans. In October 2009, Iran's General Inspection Office informed that Iranian banks have some $38 billion United States dollars of delinquent loans, while they are only capitalized at $20 billion United States dollars. Current average for late debts of Iran's state banks is over 15%, while the global standard is 3 to 5%. Foreign reserves. Reserves of foreign exchange and gold, $40 billion to $80 billion to $100 billion because of a sharp increase in the price of oil. Iran's foreign currency and gold reserves amounted to $110 BLN in 2011. Composition. In 2007, 10% of the reserves were held in gold, 20% in US dollars, the rest mostly in euro and other major currencies. In 2009, Iran's President Mahmoud Ahmadinejad ordered the replacement of the US dollar by the euro in the country's foreign exchange accounts because it would help decouple Iran from the US banking system. Gold reserves. In October 2010, Iran's gold reserves hit record high as the central bank took preventive measures to avoid a possible asset freeze by Western countries. In 2009, when the gold price was on average $656 per ounce, a few hundred tons of gold were imported. IRNA quoted CBI Governor Mahmoud Bahmani. At present, the price of each ounce of gold is $1,230. Consequently, the value of the national reserves has risen by a few $billion, he said. Iran has changed 15% of its foreign exchange reserves into gold as the number is 1.7% for countries such as India and China. In January 2012, the head of Tehran's Chamber of Commerce reported that Iran had 907 tons of gold, purchased at an average of $600 per ounce and worth $54 billion at today's price. The CBI governor, however, reports only 500 tons. The discrepancy is unexplained, but the 907 tons could include below-ground gold reserves and possibly the gold in Iranian private hands. In 2014, reports from the central bank put its gold stores at 90 tons only, the rest possibly used in barter trade following sanctions. Oil revenues. Foreign currency proceeds from crude sales are managed by the central bank. According to Fada newspaper, the difference between President Ahmadinejad administration's revenues and the amount deposited with the Central Bank of Iran exceeds $66 billion. This amount is broken down as follows: $35 billion in imported goods, $25 billion in oil revenues, $2.6 billion in non-oil export revenues, $3 billion in foreign exchange reserves. This is a large number as it is equal 1/10 of Iran's total oil revenues since the 1979 revolution. Oil Stabilization Fund and National Development Fund. In October 2000, the Parliament approved establishment of the Oil Stabilization Fund. Purpose: part of the reserves are held in the $23.3 billion Oil Stabilization Fund, designed for capital investment or for budget support if oil prices, Iran's main foreign exchange earner, fall perilously low. Funding: any budget surplus revenues from the sale of crude oil and gas is to be paid into the Oil Stabilization Fund. 80% of Iran's forex earnings comes from oil. A new fund will supplement the Oil Stabilization Fund in 2011 called the National Development Fund. Based on Article 84 of the Fifth Five-Year Socio-Economic Development Plan, the National Development Fund was established to transform oil and gas revenues to productive investment for future generation. The money will increasingly be deposited in domestic banks. Accordingly, 20% of oil income is to be transferred to the National Development Fund. The new fund is to extend 50% of its financial facilities to private, cooperative and non-governmental sectors and 20% to promote foreign investment. It is foreseen that the development fund will reach $30 billion by March 2012. Foreign exposure and transactions. Iran's foreign debt, $22.07 billion in 2010. Iran's deposits in foreign banks stand at $35 billion, while its obligations amount to $25 billion. In 2007, Iran had $62 billion worth of assets held abroad. According to the Bank for International Settlements, Iran's deposits with 39 world banks reached $15.44 billion at the end of March 2012, while its obligations stood at $10.088 billion. In addition, it was reported that Iran had between $10–20 billion held in foreign banks in 2011, allegedly because of payment problems by foreign companies to Iran. According to EU sources, despite the European sanctions, Iran has still several billion euros deposited in accounts in Germany, Italy, Malta, Spain, Greece and Switzerland. As at 2013, only $30 billion to $50 billion of its foreign exchange reserves is accessible because of the international sanctions. Transactions. Foreign transactions with Iran amounted to $150 billion between 2000 and 2007 worth of major contracts and both private and government lines of credit. According to the Bank for International Settlements, the balance of Iran's foreign exchange interactions in foreign banks and financial institutes during Q3 2008 stood above $24.3 billion.